Hello, Abe Safa here with Century 21 Harrelson Group in Myrtle Beach, South Carolina. Wanted to just give you this month's real estate market update for the Grand Strand area. As you can tell by the title, mortgage rates drop have impacted the real estate market here in town. And let me tell you what is going on. So as of right now, as of this morning, the national 30-year average for mortgage is 6.11%. Big decrease from what it was at the height, which was 8%. That's a big drop. So every percentage point that it drops, there's a whole slew of buyers out there waiting for that particular rate to hit. And there's a lot of demand at the 6.11% area, which we've kind of noticed in the last couple of weeks. I'm hoping that continues to drop, but so far so good. Things are going down. And I'm going to circle back to this at the end of this video because I want to talk about the real estate market. But you can also look here, FHA is below 6, and then the VA 30-year is below 6. So let me dive into the real estate market real quick, and then let's take a look at what's happening with the inventory. All right, here's the chart for the condo market. This is the month's supply of inventory. So this, in other terms, is also called the absorption rate. This also means that how many months it takes for us to clear out all our inventory right now that's on the market. So right now, the number is 6.8%. If you've been watching my videos, you'll see that the number's been increasing month after month. It was really low back in 2022. That's when the market was on fire. And then you can see how it just kept going up and up. And we thought it kind of leveled off the last couple of months, but it didn't. It's still slowly increasing. I think it was like 6.4 months last month, 6.2 the month before that. Maybe 6.1 the month before that. So it's not growing as quickly as it was before, but it's still continuing to grow. When we look at what's actually selling, right? Because sometimes that number can be a little bit deceiving, even though I think it's the most accurate number to look at. If you look at the number of closed sales last month in condos, it was down 21% compared to August of last year. And then if you look at pendings, which is a good leading indicator to look at what's going to happen in September as far as closed sales, that was down 24%. So none of those numbers are looking good here in the near future as far as condos go. A little bit concerned about that. Let's take a look at the home market, see what that looks like. If you look at single family homes, that number is 4.4 months supply of inventory. So not quite as bad as the condo market, but you can see it's still growing as well, just nowhere near as much as the condo market as well. Now, the good news for the single family homes is not only is it growing at a smaller rate, if you look at number of closed sales last month, it was 493 homes that were sold. It was actually up, not a lot, 1% up from last August, but it's still up. It beats being down 10, 20% like the condos. And then if you look at the pendings, which is going to show what we're going to do as far as closed sales for September, we have 472 pendings in August. Again, that's up 1.4% compared to last August. So those numbers are looking good. Inventory is growing at a smaller rate. Pendings are up. Closed sales are up. Mortgage rates are going down. So all of these things are pointing in the right direction. Now, let's go back to mortgage rates because I think that's a big deal. As I said earlier, for every single percentage point that goes down, there's a bunch of buyers out there just waiting to pounce on that number. So we've seen the last couple of weeks, 2 or 3 weeks, a lot more activity from buyers on our websites. Definitely getting a lot more phone calls on properties, getting more showings on properties, and getting more offers than we have been the last 2.5 years. It's been super slow. If you look at the national average right now, we're kind of tracking back to almost a normal level. So it's kind of really flattening out and leveling back, going back to somewhat of a normal market. Now, the big news next week, you're going to hear it all over the news, is the Federal Reserve is meeting and talking about the Fed rate. Almost everybody's anticipating a drop in the Fed rate. Most likely it's going to be 1/4 point. It may be 1/2 point. We're not quite sure yet. I can't imagine it's going to be more than 1/2 point, most likely to be 1/4 point. So I know there's a misconception out there because I hear this from buyers. I'm going to wait till the Fed drops the rate so I can lock in a mortgage rate. Just because the Fed drops the rate doesn't always necessarily mean the mortgage rate is going to go down. As a matter of fact, look at the last 2.5 years. The Fed has not dropped the rate at all, and we've seen mortgage rates go from 8% to a little over 6%. How do you explain that? Well, very simple. There's not a direct correlation between the Fed rate and the mortgage rates. Now, what happens is the Fed rate has a big impact on the bond market. So if you look at the 10-year Treasury and you look at the mortgage rates, those almost always go hand in hand with one another. There's, of course, the spread between the two, usually about a 1.25 or 1.5 percentage spread between the two, but it's almost always historically when you look at the 10-year treasury goes up, mortgage rates go up, 10-year treasury goes down, mortgage rates follow. And the bond market, 10-year treasury, is also smart, and it anticipates what the Federal Reserve is going to be doing because it's really based on what they think the policy is. Okay, the rate is important, but also it's about the policy, and is it, how constrictive is it, or how loose is the policy? And at this point, almost everybody feels that the worst is behind us, and the Fed is going to be slowly working their way back from a constrictive policy to more of a neutral policy. I don't see them getting super aggressive just yet. I mean, we'd have to see a really big slowdown in the economy for them to do that. But the fact that we're slowly talking about, we're finally talking about a Fed rate drop, and we're starting to see Jerome Powell talk softer about the mortgage rates. I mean, not the Fed rate, and about the economy. That has led the bond market to kind of anticipate these drops, and that's what pushed the mortgage rates down so much. Now, that doesn't mean if there's a drop next week in the Fed rate that there's not more room in the mortgage rates to come down. I'm hoping that there is. I would love to see us break 6. Anywhere in the 5 range would be wonderful. As a matter of fact, the forecast, the low end of the forecast is 5.75 by the end of the year. Would love to see that because I know that's going to add more and more buyers into the maze. But bottom line is this: as these mortgage rates go down, we start to see more and more activity. We're feeling it, getting more offers, getting more showings, getting more requests, getting more phone calls from buyers. And that's only going to get better and better as rates continue to go down. I'm going to put my phone number up here. If you have any questions at all about your property, or if you're looking to buy, have a question, want to talk about it, please give me a call. Feel free. That's a direct number, straight to my cell phone. I'm the one that picks that up. Would love to talk to you. If you've been watching my videos and you feel like there's some value in it and you like them, please hit like on the video. Subscribe to my channel. Would love for this video to get out to as many people as possible so they can know what's going on in the market. And the more that you like it, the more you subscribe, the more visibility YouTube gives me on these videos. Appreciate your time. Would love to talk to you. Give me a call.